In a world filled with questions, where wisdom knows no boundaries, join us on a journey of enlightenment and endless learning. Eternal Teachings. TV. Discover the eternal.
The global economic landscape is shifting. A new bloc of nations is asserting its presence on the world stage. Brazil, Russia, India, China, and South Africa, collectively known as BRICS, are reshaping global trade and finance. These emerging economies represent a significant portion of the world's population and resources. Their combined economic output is substantial and continues to grow. BRICS nations are increasingly interconnected through trade and investment. Together, they represent a formidable force in the global economy. They are home to a burgeoning middle class and a surge in consumer demand. Their industries are expanding and their technological capabilities are advancing. This economic dynamism has positioned BRICS as a key driver of global growth. The US dollar has long been the world's dominant currency. Its roots lie in the aftermath of World War II. The Bretton Woods Agreement established the dollar as the anchor of the international monetary system. This system pegged other currencies to the dollar, which was backed by gold. The United States emerged from the war as an economic powerhouse. Its currency became a symbol of stability and reliability in the global financial order. For decades, the US dollar has served as the primary currency for international trade and investment. Oil, the lifeblood of the global economy, is priced in dollars. Central banks around the world hold significant reserves of US dollars. This dominance has afforded the United States significant economic and political leverage. The ability to print the world's reserve currency grants a unique advantage in global affairs. However, the landscape is changing. The rise of emerging economies, particularly BRICS, is challenging the dollar's supremacy. The global financial crisis of 2008 exposed vulnerabilities in the US economy. It raised concerns about the sustainability of the dollar-centric system. BRICS nations seeking to reduce their reliance on the dollar began exploring alternatives. BRICS nations are increasingly vocal about their desire to reduce their dependence on the US dollar. This move, known as de-dollarization, is driven by a confluence of factors. One key motivation is economic sovereignty. Reliance on the dollar exposes BRICS economies to fluctuations in US monetary policy. They aim to gain greater control over their financial destinies. Another driver is the desire to reduce transaction costs and enhance efficiency. Conducting international trade and investment in local currencies can streamline transactions. It can also mitigate exchange rate risks for businesses. BRICS nations see de-dollarization as a means to foster economic growth and integration. Geopolitical considerations also play a role. The use of the dollar as a tool of economic statecraft by the United States has raised concerns. Sanctions and other financial measures have highlighted the potential vulnerabilities of dollar dependence. BRICS nations are seeking to create a more multipolar financial system. BRICS nations are pursuing a multi-pronged strategy to reduce their reliance on the US dollar. One key element is promoting the use of local currencies in bilateral trade and investment. Agreements between BRICS nations encourage the use of their own currencies for transactions. This reduces the need for dollar conversions and strengthens their respective currencies. Another strategy is the development of alternative payment systems. These systems bypass traditional SWIFT channels. They provide an alternative for cross-border payments and settlements. These systems aim to reduce reliance on US-dominated financial infrastructure. The establishment of the new development bank, NDB, is a cornerstone of BRICS de-dollarization efforts. Headquartered in Shanghai, the NDB provides financing for infrastructure and sustainable development projects in BRICS and other emerging economies. It offers an alternative to the World Bank and the International Monetary Fund, which are perceived as being dominated by Western powers. Section 5. Tremors in the global financial system, the potential impact. The de-dollarization efforts of BRICS have the potential to send shockwaves through the global financial system. A decline in the dollar's dominance could lead to a more multipolar currency system. This would have far-reaching implications for international trade, investment, and geopolitics. The transition, however, is unlikely to be smooth or immediate. One potential impact is increased volatility in currency markets. As the dollar's dominance wanes, exchange rates could become more susceptible to fluctuations. This could create uncertainty for businesses engaged in international trade and investment. Central banks would need to adapt their reserve management strategies to navigate a more fragmented currency landscape. The role of the US dollar as a safe haven asset could also be challenged. Investors seeking refuge from economic turmoil have traditionally flocked to the dollar. However, as confidence in the dollar's long-term prospects diminishes, alternative safe havens may emerge. This could lead to a shift in global capital flows and impact asset prices. Section 6. A road paved with challenges, risks, and obstacles for BRICS. While the de-dollarization ambitions of BRICS are clear, the path ahead is fraught with challenges. One significant obstacle is the lack of full convertibility and liquidity of some BRICS currencies. The Chinese yuan, for instance, is still subject to capital controls. This limits its appeal as a global reserve currency. Another challenge is the need for greater financial integration and harmonization within BRICS. Despite their growing economic ties, disparities in regulations, financial systems, and levels of development persist. Addressing these differences is crucial for creating a truly integrated BRICS financial bloc. The potential for internal divisions within BRICS also poses a risk. Geopolitical tensions and competing interests could undermine their collective efforts. Maintaining unity and cooperation will be essential for BRICS to achieve its de-dollarization goals. Section 7. A New World Order, Geopolitical Implications of De-Dollarization. The de-dollarization push by BRICS has profound geopolitical implications. A shift away from the US dollar could erode America's economic and political leverage on the world stage. It could lead to a more multipolar world order, with power more evenly distributed among nations. The rise of alternative reserve currencies could diminish the effectiveness of US sanctions. Currently, the US can exert pressure on countries by threatening to cut them off from the dollar-based financial system. However, if countries have access to alternative currencies and payment systems, the impact of such sanctions would be reduced. The competition for global influence between the US and BRICS could intensify. As BRICS nations gain economic clout, they are likely to assert themselves more forcefully in international affairs. This could lead to greater competition for resources, markets, and geopolitical dominance. Section 8. The promise of prosperity, economic impacts within BRICS nations. De-dollarization holds both promise and potential risks for the economies of BRICS nations. On the one hand, reducing reliance on the dollar could shield them from external shocks and grant them greater control over their monetary policies. This could lead to greater economic stability and resilience. Promoting the use of local currencies could boost intra-BRICS trade and investment. Businesses would benefit from reduced transaction costs and exchange rate risks. This could lead to increased economic integration and growth within the bloc. However, de-dollarization also carries risks. Volatility in currency markets could disrupt trade and investment flows. The lack of full convertibility of some BRICS currencies could limit their attractiveness for international transactions. Section 9. Reshaping global trade implications for investment and commerce. The de-dollarization drive by BRICS has the potential to reshape global trade and investment patterns. As BRICS nations promote the use of local currencies and alternative payment systems, businesses operating in these markets will need to adapt. Companies may need to adjust their invoicing and settlement practices to accommodate transactions in currencies other than the US dollar. Financial institutions will need to enhance their capabilities to handle cross-border payments in a more diverse range of currencies. Investors may seek to diversify their portfolios to include assets denominated in BRICS currencies. This could lead to a shift in global capital flows and create new opportunities for investors willing to navigate the evolving landscape. Section 10. The future of finance scenarios for the dollar and BRICS currencies. The future of the US dollar and BRICS currencies remains uncertain. Several scenarios are possible, ranging from a continuation of dollar dominance to a more multipolar currency system. One scenario is that the US dollar retains its preeminent position, albeit with a diminished share of global reserves. In this scenario, BRICS currencies gain ground but do not displace the dollar as the primary reserve currency. Another possibility is the emergence of a multipolar currency system with the dollar, the euro, and a basket of BRICS currencies vying for dominance. This scenario would likely be characterized by greater currency volatility and a more complex global financial landscape. A more radical scenario is the complete demise of the dollar as the world's reserve currency. While unlikely in the short term, this scenario could unfold over a longer time horizon if the US economy experiences a significant decline or if faith in the dollar collapses.